Assalamualaikum. Hi everyone. So now we are in chapter 4, double entry principles. So today I want to discuss about double entry for inventory. So for kind reminder, you might need to use your earphone or headphones for better audio quality. So please refer to your textbook at page 44. In chapter 3, we have determined the movement of the inventory, that is the increase in inventory and decrease in inventory. Increase in inventory is due to purchase of goods and sales returns or returns inward. A decrease in inventory is due to sales of goods and purchases returns or returns outwards. The double entry rules are as you can see in your slide right now. For purchase of goods, the effect will be your purchase expenses will increase. Therefore, you will debit the purchases account. For sales of goods, the effects will be your sales revenue will increase. Therefore, you will credit the sales account. For purchases returns or return outwards, the effects will be your purchase expense will decrease. Therefore, you will credit the purchases returns account or return outwards account. And for sales returns or returns inwards, the effects will be your sales revenue decrease. Therefore, you will debit the sales return or return inwards account. Now, let's look at some examples. Please refer to page 45 for example 4.11. So for under this example, on 6 Jan it stated that the business purchased goods worth 2,000 on credit from Rohani Trading. So the journal entry for this example will be debit purchases and credit payable accounts, which is Rohani Trading. Amount with 2,000. So this will be the journal entry. Now, how about the ledger? Let's look at the ledger. Two accounts. First, purchases account, and the second account will be payable Rohani. So as you can see in the journal, you need to debit the purchase account. So put the date, put the particular which is payable Rohani on the debit side of your purchase account. Next, you will credit the side of Rohani. Particular will be purchases and amount will be 2,000. So this will be the example for purchases of goods. Now let's look at the example of 4.12. Example 4.12 is about purchase return or return outwards activity. So on Jan 7, the business returned goods worth 100 ringgit to Rohani Trading. So the journal entry will be debit payable Rohani and credit return outwards account or purchase return account. amount will be 100 ringgit. Now, let's look at the ledger. So you need to open one account and reuse back the payable rohani trading that you had opened in previous transaction. So you will debit payable rohani. So put it as written outward, amount 100 ringgit, and then on the credit side of written outward, we will key in the transaction with particular of payable rohani. So this will be the purchase returns transaction. Now let's move to example 4.13. So it is about sales good. So let's look at the example Jan 8. Credit sales 400 ringgit to Ali. So the journal will be debit receivable Ali, and credit sales account with the amount of 400 ringgit. So you need to open two accounts. Receivable Ali and account sales. So debit receivable Ali with a particular of sales and amount of 400 ringgit, and credit sales account. So this will be an example of journal and ledger for sales of goods. Let's look at the example of 4.14. Jan 15, Ali returned defective goods worth 40 ringgit. So this is an example of sales return transaction. So the journal entry will be debit return inward account or sales return account, and credit receivable Ali. You will use the same account receivable Ali, and you need to open a new account named return inward or sales return. Okay, so this will be the example of the journal entries and the ledgers on sales return or return inwards transaction. So I will continue with the transactions for trade discount, cash discount, and carriage expenses in the next part of this video. So stay tuned and see you again. Bye. Assalamualaikum.